Do you know what Saudi Arabia did when all it had was sand and sunlight? It drilled. And what happened next flipped the world economy forever. Now imagine if the Philippines, a country of over 7,000 islands, with the least developed oil industry in ASEAN, suddenly did the same. No more waiting. No more importing. Just a nation rising from the waves, fueled not by aid or remittances, but by the $26.3 trillion worth of oil and gas buried beneath its own soil and sea. But if this energy fortune has always been there, why hasn't the Philippines tapped it? What's really holding this sleeping giant back? And what happens if each penny of the $26.3 trillion worth of oil and gas buried under the land is used? In this video, let's break it all down. Some nations are born rich. Others dig for their riches. But the Philippines, it's been floating above its fortune for decades, untouched, unrealized, and underestimated. Beneath the warm tropical waters of the West Philippine Sea lies one of the most underexploited treasure troves of the 21st century. And we are not talking about vague estimates or hopeful speculation. This is cold, hard geological data. The Spratly Islands alone may contain 3 billion barrels of oil. Yet that's just one chapter. Deeper down, in zones like the Celebes Sea and Usulu Basin, the estimated combined worth of oil and gas rises to $26.3 trillion, more than the GDP of the entire European Union. Put into perspective, Kuwait, one of the world's richest petrostates, holds around 13 billion barrels of oil. And yet the Philippines, possibly richer underground, stands among the region's top oil importers, burning through over 429,000 barrels per day, while producing less than 10,000. It's not just ironic, it's tragic. Why? Because this isn't just a story of geology, it's a story of paralysis. For over half a century, the development of the country's offshore reserves was stalled by a perfect storm. Unresolved maritime disputes, diplomatic caution, legal uncertainty, and Beijing's rising aggression. Strategic sites like Reed Bank and Mischief Reef, sitting squarely within the Philippines' exclusive economic zone, became theaters of intimidation, not production. Every Filipino president since the 1970s has danced around these resources. Some tried to partner with China, others looked west, but none dared to fully commit. Malampaya, the nation's crown jewel of offshore natural gas, helped power Luzon for years. But now it's running dry, and when it does, likely by 2027, the cost of delay will become painfully visible. So here we are, a country on the edge, a treasure still buried, a decision long overdue. It's no longer a question of, can we drill? It's, what happens if we don't? And that's when the first sparks lit the fuse. When the tide finally shifted, it didn't roar. It hummed. Quietly, then faster, then louder. The Cadlao oil field, once mothballed in the early 1990s, became the first flame to flicker. Located off northwest Palawan, this forgotten site, believed to contain 6.2 million barrels of recoverable oil, was given a second chance. But Cadlao wasn't alone. It was a signal, a whisper to the world that the Philippines was waking up. And the map began to glow. In Alegria, Cebu, drills struck oil, 27.9 million barrels to be exact, with 3.4 million barrels already marked for recovery. The discovery was celebrated, but it wasn't just about barrels. It was about belief. Then came the big one, Ligawasan Marsh in Mindanao. Beneath its wetlands sat 3.4 trillion cubic feet of natural gas and 4.8 billion barrels of crude oil, a figure so large it shocked even government insiders. This was no longer potential. This was reality. Then the energy footprint expanded again. Northern Cagayan, Ragay Gulf, Cotabato Basin, areas once dismissed as inaccessible or unviable, were suddenly back in play. New seismic surveys showed encouraging results. Partnerships were forming. Investment was trickling in. And for the first time, there was political will to support it. But perhaps the most curious and futuristic discovery emerged from the Benham Rise off Aurora Province. Here, scientists didn't just find oil or gas. They found methane hydrates, better known as fire ice. This elusive substance, which is frozen methane trapped under high pressure, has the potential to outclass oil, gas, and coal combined in energy density. Though volatile and technically challenging to extract, it represents a leap into a new age of energy, one that the Philippines could pioneer if it plays its cards right. And here's what makes this movement so profound. This isn't about copying others anymore. It's about charting a new energy path, one that's deeply nationalistic, self-sustaining, and born from urgency, not complacency. Because now, it's not just about energy. It's about identity. It's about sovereignty. The forgotten fortune has started to whisper again. And if the Philippines keeps drilling, strategically, safely, and with purpose, that whisper could become the roar of a nation rising. Now momentum is building. The drills are humming. Discoveries are multiplying. But one threat still hangs like a shadow over the entire Philippine energy dream. You can't drill in a war zone. The West Philippine Sea, although rich in energy resources, has become one of the most militarized stretches of water on Earth. What should be a maritime highway for trade and exploration has turned into a contested region, with Chinese warships, Coast Guard vessels, and militia fleets playing the role of aggressive gatekeepers. For every oil survey team the Philippines sends out, China sends in a warning, sometimes with a radio call, sometimes with a water cannon, and increasingly with steel hulls smashing into Filipino boats. The 2016 International Tribunal ruling in The Hague, which invalidated China's 9-dash line, was supposed to change everything. Legally, the Philippines had the upper hand. But law and reality aren't always the same. Beijing simply ignored the ruling, ramped up its presence, and began constructing artificial islands bristling with radar systems, runways, and missile sites. This wasn't just about sovereignty anymore. This was about intimidation. And it worked, for a time. Investors stayed away. Projects stalled. The promise of energy independence dimmed under the threat of confrontation. Who wants to pour billions into offshore drilling when a single Chinese patrol can shut it down with zero accountability? But something has changed in 2024 and 2025. Before we continue further, tell us, are you enjoying the video? If yes, please like and share the video and subscribe to our channel to watch more videos on the latest news stories on geopolitics, economics, and current affairs impacting your lives. The Malampaya gas field, once the backbone of the nation's energy security, is running out. And when your last reliable energy source is drying up, fear no longer pays the bills. Under President Ferdinand Marcos Jr., the Philippines is shifting from caution to confrontation, not with military force, but with legal, economic, and diplomatic assertiveness. The government is reopening stalled projects. It's publicly naming the foreign companies showing interest. And perhaps most crucially, it's refusing to be paralyzed by China's aggression. Now, energy exploration in the disputed waters is no longer just a risk. It's a necessity. The hesitation that once held back generations of leaders is finally cracking. Because the alternative is national collapse. So where do you drill when the disputed waters are too dangerous? You go where no one can stop you. And that's the new strategy taking shape in Malacanang and the Department of Energy. Focus on undisputed territory first and unlock the full potential of the Philippines' internal basins. Turns out, the richest reserves may not even be in the contested Spratlys. Areas like the Sulu Sea, Mindanao's Ligawasan Marsh, the Cotabato Basin, and northern Cagayan sit squarely within sovereign Philippine territory, far from Chinese interference. No naval standoffs, no 9-dash lines. Just potential. That's why the government is fast-tracking permits, streamlining exploration licenses, and launching open data initiatives to attract local and foreign investors alike. Private energy firms are being encouraged to enter joint ventures. Laws are being reviewed to clarify ownership rights, revenue sharing, and tax incentives, especially under the country's 60-40 foreign investment structure. And what happens when the full potential is unlocked? Well, if the Philippines unlocks the full potential of its estimated $26.3 trillion worth of oil and gas reserves, the transformation could be nothing short of historic, a national rebirth comparable to what Saudi Arabia, UAE, and Kuwait experienced in the 20th century. These once sleepy desert kingdoms transformed themselves into global powerhouses by using oil revenues to fund infrastructure, education, defense, and sovereign wealth funds. The Philippines could follow a similar trajectory, but with its own Southeast Asian flavor. First, economic independence would finally become a reality. Right now, the country imports over 90% of its oil, making it vulnerable to global supply chain shocks and volatile energy prices. Domestic production would slash that dependence, stabilize local fuel prices, and ease inflation pressures. Energy affordability would ripple through the economy, reducing costs for manufacturing, agriculture, transportation, and households. Power bills would drop. Goods would be cheaper. The cost of doing business would fall dramatically. Second, revenues from oil exports could flood government coffers, giving the Philippines a once-in-a-lifetime opportunity to reinvest in its future. Think massive infrastructure projects like high-speed rail, modern airports, and deep seaports. Think universal health care, free education, and tech-driven public services. Just as Saudi Arabia created Riyadh into a futuristic hub, and the UAE turned Dubai into a global city, the Philippines could finally fund the transformation of Manila, Davao, Cebu, and beyond. Third, the Philippines could establish a sovereign wealth fund, modeled after Kuwait's or Norway's, to invest oil profits into global markets and ensure long-term financial security. This could create intergenerational wealth and protect the nation from future oil price declines or resource exhaustion. Fourth, the nation's geopolitical status would skyrocket. Energy independence backed by massive reserves would increase the country's leverage in foreign policy and trade negotiations. The Philippines would no longer be seen as a minor player. It would be a core energy hub in the Indo-Pacific. And finally, perhaps the greatest transformation would be psychological. People long held back by corruption, foreign interference, and poverty would begin to believe in their own strength. That kind of mindset shift is what built the skyscrapers of Dubai and the high-speed cities of Riyadh. So the real question isn't if the Philippines can become like the Gulf states. It's when and how fast the nation decides to drill, develop, and defend what's already its own. What do you think? If the Philippines uses its oil and gas wealth, will the Filipino people benefit, or will others get rich while they wait? Do you believe there are countries that are creating hurdles for the Philippines to restrict it from tapping into its rich oil and gas reserves? In the comment section below, share your thoughts on what the Philippines will become if buried wealth is used. Do you want to watch more videos like this one? If yes, subscribe to our channel and press the bell icon next to it. We bring the latest news stories on geopolitics, economics, changing world order, and current affairs. Things you need to stay informed. Thanks for watching, and until the next video, stay tuned.